You look at silver, silver is at an all-time high. You look at gold, gold's at an all-time high. And so you got to ask the question now, is something broken or something wrong in crypto? Or is there another explanation?
How much of Bitcoin's rally in the beginning of the year was driven by political narratives around what Trump and his administration may do with Bitcoin and the Bitcoin strategic reserve?
Well, if my thesis is right, if this part of the thesis plays out, first thing,
Ron Neuner is back. He's the founder of Crypto Banter. Let's talk about this crypto market. Bull or bear or just sideways action? What's next? Ron, welcome back to the show. Good to see you.
Good to see you. How are you, Dave? Good to see you. Haven't been on here for a while talking crypto. And
Very good.
I'm glad to see you back.
Seems like yesterday you were on. It was actually a couple of months ago. And time flies when you're having fun. The crypto markets are the theme of our discussion today. Let's start with Bitcoin. $90,000 down 3% today, down another 3% yesterday. And it's still up quite a bit from its summer lows, but not quite back at $100,000. I wonder, and this is just a theory of mine, you know how a couple of years ago people were saying, well, Bitcoin and cryptos were skyrocketing and stealing all of the metals thunder, gold and silver investors were flocking to Bitcoin and crypto. I never verified that narrative. I'm not sure if that's true. Some people claim it is, some people claim it isn't. I wonder if the reverse is happening now, when a lot of the speculators that you used to see a couple of years ago in the last bull cycle with the meme coins, they're not going back to the metals. Silver's gone up, 170% in the last 12 months? Gold's up 76%? Yeah, go ahead.
I think every investor right now is flocking into commodities. And I think that, I think commodities are in a very, very, very rare super cycle. You've got commodities all moving up together. Gold moving, silver moving, copper moving, uranium moving, lithium moving. So I think we're in a commodity super cycle. Now, the one thing we know about a commodity super cycle is that the commodity super cycle basically affects all markets. And when I say that, the rising tide of the commodities basically filters into things, because people get rich on commodities and then they start to invest their money into other places, other commodities. The Russell 2000 also just made a breakout, et cetera, et cetera. Crypto has been an anomaly. And if you look at every single market in the world, is at all-time highs. I mean, if you look at the NASDAQ, close to all-time highs, the S&P is close to all-time highs. Let me just get some charts here just to give us some perspective here. So you look at the S&P 500. The S&P 500, for all intents and purposes, is just below an all-time high. You look at silver. Silver is at an all-time high. You look at gold. Gold's at an all-time high. And I don't think I need to spell it out. I don't think I need to spell it out for your viewers. And so you got to ask the question now. Is something broken or something wrong in crypto? Or is there another explanation? And I want to go through both situations. So it's very hard for me to believe that every asset class in the world and every risk asset class in the world is at all-time highs. And the one risk asset class, which is a perfect fit, because if you think about what Bitcoin is, it's a technology and it's a commodity. And if you think about what Ethereum is, it's a commodity and it's a technology, right? And if you've got technology running and commodities running, and the mix between commodities and technologies are not running, then you got to ask yourself why. So there's two theories, and I think we should explore both theories because I think both have merit. The first theory is the simple 4-year cycle Bitcoin theory. And the 4-year cycle Bitcoin theory basically says that 1 year after the halving or 530 days after the halving, basically Bitcoin tops. That would have put us on the 6th of October. If you look at the chart here, on the 6th of October, we indeed did top. We topped at $125,000. And ever since then, we've been in a bear market. That would be what the 4-year cycle I call them the 4-year cyclists in Bitcoin believe, right? They believe that 1 year after or X days after the halving, we reach a top. 532 days after the halving, we reach a top. 532 days was exactly the 6th of October. We exactly topped on the 6th of October. And ever since then, we had a sell-off. And so that is one theory. The only problem is that mathematically, if you think about what the halving is, it's the reduction of the Bitcoin supply by 50% from the previous halving. And if you think about the demand for Bitcoin is very high this cycle. And the reduction in supply is quite minuscule in comparison to the new demand from sovereign wealth funds, from institutions, from ETFs, from digital asset treasury companies, etc. Let me give you another theory. And I want to back this theory. When I say a theory, I'll back it all up with the charts. if you take Bitcoin on a 1-year time horizon from October 7th, 2024, and you take it all the way to October 7th, 2025, Bitcoin was 100% up. It was 90.91% up. It just so happened that on this date, we got into a correction, and we're 90 days into a correction. And what you can see, quite interestingly, is you can see that actually from January, and it's exactly the 1st of January, funny enough. So if I zoom onto this chart over here, you can see that there's a downtrend that started on October 6th. On the 1st of January, we broke through that downtrend and we started going up, right? So you can see the chart. I mean, for anyone who follows chart patterns, there's the starting point, there's a higher low, there's the next higher low, there's the next higher low. And now we've got a higher high here, and you've got a higher high here, and you've got another higher high. So the chart pattern kind of says, look, maybe Bitcoin is in a recovery. Maybe it's going to reject, but for now, we've got to work with the data which we've been given, right? So maybe if the year would have ended on the 10th of October, then we would have said Bitcoin had a great year. It had a 100% year. That's not the best year, but it's a respectable year in asset classes to double in 365 days. Maybe this was just a correction, and maybe we were just calling because the calendar ends on a certain date, we said, okay, Bitcoin had a down year, therefore it was in a bear market. Now I want to show you some other points here, right? And I think let's go back to my original discussion where I said to you that what is crypto? Crypto is a risk asset. It's the ultimate risk asset. It's a commodity. It's the risk asset that moves with increased liquidity. It is the risk asset that moves with increase in the business cycle. At the same time, crypto is a commodity. Because if you think about it, what a commodity is, it's basically like Bitcoin is a store of value. It's like a digital gold. ETH is like the oil that powers the Ethereum network. Solana is like the oil that powers the Solana network. So ultimately, if you think about Bitcoin or crypto is a risk asset. It is a pseudo commodity, and it's a technology. Commodity markets are all at all-time highs. Technology markets are all at all-time highs. They're being powered by AI. If you think about where this whole boom is coming from, this whole boom is being powered by AI. The commodities are not all, the commodities are going up on two trades here. The first trade is the debasement of the currencies and sovereigns hedging themselves against currency debasement and dollar weaponization, and that's why they went into gold. Gold caused silver to run. Silver caused the rest of the commodities to run. But something interesting also happened. There was the AI boom at the same time. AI requires electricity, crazy amounts of electricity, crazy amounts of chips, processors, etc. Those things require silver, they require uranium, they require lithium, they require copper. So you got the two worlds colliding. You got the speculative gold bubble or gold debasement trade. And at the same time, you got the AI bubble causing a structural demand for these industrial goods. Now, let's look at on that background, the Bitcoin hasn't been performing. But I want to show you one chart. And this is the chart that I think is worth looking at the moment. So this is the chart of Bitcoin against the other metals, so gold, silver, copper, and Bitcoin in 2017. And here's the same chart for 2021. So you got gold, silver, copper, and Bitcoin. What you notice is that first gold tops, then silver tops, then copper starts the run, but at the same time, Bitcoin starts to run. That happened in the 2017 cycle, and that happened in the 2021 cycle. Now, let's look at where we are in this cycle. I think you'll agree with me that when you look at this chart, this kind of price action is not normal and not sustainable. This is silver. And I think you'll agree with me that this kind of price action is not normal and not sustainable. It's an unnatural move in the charts, right? And if you want to take it one step further, let's put some RSIs onto it, because RSIs will show you how overextended the market is. And you can kind of see that if you look on a weekly, on silver, that's how high the RSI is. It's like we haven't seen these RSI levels since, I don't even know if we've ever seen, okay, since May 2011. That was the last time the RSIs were this high. So you could kind of say that silver looks unnaturally high and could potentially top soon, right? It looks like it from having been in markets for a long period of time. And if that's the case, and we also call up the copper chart, so here's the copper chart. There's the copper chart. Here. That's the copper chart. And the copper has just broken out of the structure and is now very much on the uptrend. What I'm suspecting is happening is Bitcoin hasn't performed because it went through a correction in the last quarter of the year. And maybe now Bitcoin is recovering from this correction. And if it is recovering from the correction, there is a chance that we're repeating this pattern over here, which is gold tops, silver tops, and then copper and Bitcoin actually go on their big run. And that's the thesis that I'm looking at you. Again, it could be that the 4-year cyclists are right and the bull market's over. But there is the possibility that we're tracking a commodity cycle and we're tracking a liquidity cycle and that we're tracking a business cycle, and then that may happen, right?
The global financial system is rapidly moving on-chain, and today's sponsor, Cool Wallet, is a name worth watching. Cool Wallet builds next-generation cold wallets designed for a world where real-world assets, payments, and savings live on the blockchain. Their flagship credit card-sized hardware wallets combine CCEAL6 Plus secure element protection, mobile-first usability, and a unique 2+1 factor authentication system that requires your phone, your biometric ID, and your card to approve every single transaction. So here's a Cool Wallet Go card. It's an easy-to-use, on-the-go, card-sized hard drive that stores your private keys and literally fits inside your wallet or purse. Activating the card is simple. It takes about 30 seconds. All you have to do is download the Cool Wallet app and follow the on-screen prompts. Let me show you now. Activating a new wallet is very simple. Simply go on the app, click on Add Wallet, and it's going to ask me if I have a card. Yes, I have a card. Every time you order a Cool Wallet Go product and package, it comes with 2 cards, primary and backup. It's going to ask me which card type, in this case, Cool Wallet Go. Notice how it pairs with NFC. Click on that, create a new wallet, activate primary card. Either of these cards can be your primary card. Simply scan the card by tapping it to the back of your phone. Success. And it's important to know that you need the primary and backup cards to be able to fully activate the entire wallet. So both of them have to be active. Now create a new pairing password. This is important for when you need to recover your wallet in case your cards are ever lost. Generate by card. It's going to ask me to generate a private key. Tap my primary card, start setup. Now it's pairing my private key to the primary card. Now that both cards are paired with the private keys and activated, the wallet is ready to go. As you can see, it's a brand new wallet, so it has no funds in there. Every time you put money in there and you want to transfer funds to another wallet, like this, for example, it will require you to scan and tap the card to the back of your phone as a security precaution. That's just one of the benefits of using Cool Wallet. It's very secure. Remember how I said to remember your pairing password? Well, if ever you lose the card, go to settings, go down, replace primary card, and it's going to ask you to enter your pairing password. That will start the process. So once you've activated the wallet, you can use the app to swap to other tokens and cryptos. All you have to do is first click on the manage icon on the app, add the crypto that you want, then go to the home page and click on swap, and the crypto you just added should be there. You can also send cryptos to another wallet, making peer-to-peer transactions instantaneous and frictionless. There's also an earn function that allows you to stake your holdings to generate yield. Cool Wallet also recently launched a breakthrough fiat on-ramp feature. So instead of going to a centralized exchange first, you can on-ramp directly to Cool Wallet. Users can create a bank account under their name and a fiat currency of their choosing that's available, wire the funds in, and have those dollars automatically converted into a stable coin that's on-chain, directly into your wallet within minutes. With support for 40-plus mainnets, staking, lending, NFTs, and advanced clear signing protections against phishing and malicious contracts, Cool Wallet is positioning self-custody for mass adoption. To learn more, go to the link down below or scan the QR code here. And if you do use my code, you'll get a 5% off on your first purchase. I'd also encourage you to check out my interview with Cool Wallet CEO Michael O for more details on the product and why we need self-custody today. And he also explains in great detail how the security functions work. Link also down below. Well, fundamentally, is there a reason for Bitcoin and commodities to move together in the first place?
Well, fundamentally, the rising tide lifts all ships here because,
yes,
fundamentally, you say world markets are at all-time highs.
Yeah.
Stock markets, technology markets are at all-time highs, commodity markets are at all-time highs. that money has to filter into somewhere. Where's it going to go? Well, it's going to go to real estate, and it's going to go to Bitcoin. It's going to go to a whole lot of other assets. You make a whole lot of money on the stock markets. You take some out, you buy yourself that new house, right? That's demand in real estate. You make some money in gold. I'll tell you what I did. I bought silver at $24 a long time ago, and at 94, I felt it prudent to take some profits, but I didn't want to be sidelined. So what did I do? I took the profits and I put them into the Russell 2000. Right? Because I felt that was the one place that I was slightly underexposed. So, I cannot see a world where every market goes up and the tide is very, very, very high and Bitcoin sits at the bottom of the ocean. It just fundamentally doesn't make sense.
So silver is up about 150% in 2025. Bitcoin fell about 6% during the same period. If your thesis holds, how aggressive can we expect this catch-up move in Bitcoin to be?
Well, if my thesis is right, if this part of the thesis plays out, first thing, let's just get back to where we were, right? That was like, let's say, the starting point when we were tracking against every single other metal, right? So let's go back to the starting point and say, how far do we have to get to the point where if you draw a chart of Bitcoin, silver, gold, what you'll realize up until October 10th, they moved in perfect correlation. October 10th is when things separated. So let's get back to the starting point. The starting point would take us up 25%, 40%, right? That would take us just to where the starting point was. And now you've got to say, okay, well, since then, those assets have run a hell of a lot. So then, it comes down to whether you believe Bitcoin will just catch up or whether Bitcoin will amplify the move, which it's done every other cycle. So I just want to show you this again. Here's the chart again. In the first cycle, which, granted, Bitcoin was a very small asset. Silver went up 50%, Bitcoin went up 30x. In the second cycle, Bitcoin was a slightly bigger asset, granted. Silver was up 137% and Bitcoin was up 5x. So, I can't forecast the price. Very difficult for me to forecast where we're going to go. I can forecast the direction based on the data points that I've got. And again, one side of the trade tells me 4-year cycle. If the 4-year cyclists are right, Bitcoin goes into a 1-year bear market. We theoretically would be 4 months into that bear market now. 3.5 months into that bear market now. If the 4-year cyclists are wrong and we track the liquidity cycle, then we have to catch up to where we were on October 10th. And then we have to make whatever headway all the other assets made since October 10th, right? Now, let's I like to work with the data points and the charts. So let's look at the charts and let's just track where silver was on October 10th. It was at $53. So silver's doubled since then. So if we were just to track silver, and it's possible we would, then we should get to a Bitcoin price of $250,000. If that plays out according to this thesis.
If that plays out, how do you track how do you interpret crypto sentiment overall? By the way, for those who don't know, Ron is the founder of Crypto Banter, one of the largest media organizations for crypto on the internet, basically. Check out his YouTube channel, by the way, link down below. But I think, channels like yourself have a good pulse on what the consumer or the viewer wants to consume in terms of media. What are they interested in? What are they not interested in? How would you gauge their sentiment and interest level now versus, let's say, just a year ago?
This indicator, I'm not sure how accurate it is. We've been hovering between extreme fear and fear for a long, long, long time now, since October 10th. Quite unusual for crypto to hover at peak fear for so long. Like, it's not something that we usually see. We had one little spike here, but I guess we came straight back down here, like a 2-day spike where we went to neutral, and then we went all the way back down to fear. Right now, I think markets oscillate between fear and greed. You need to be buying when everyone's fearful, and you need to be selling into extreme greed. And the charts are telling me that we've been in extreme fear for a long time now. If I look at previous bear markets, it's highly unusual that we hover in extreme fear for more than 30 days. And that's where we've been, kind of thing. So, again, another data point that says buy in extreme fear, don't sell in extreme fear. A good time to accumulate is when the market is in extreme fear. And what's probably worse than extreme fear is extreme apathy. So where we are in crypto now is that people are fearful, and those people that are left are apathetic. It's like, crypto hasn't moved. The share of mind is in the commodities, and share of mind in finance equals share of money, has moved to the commodities and the stock market. And at some point, you would imagine that either we're going into a very long bear market, or we get a recovery here and the money starts to flow back into a very illiquid asset class and a lot flows back. Let me talk a little bit about risks, because, I don't want to paint this picture that we're about to jump and we're about to fly and it's all risks. Risk number one is that Bitcoin is going to track a 4-year cycle. And then we're going into a 1-year long bear market if we track previous 4-year cycles, and then, we could continue to go down for the next year. One other risk for me is this risk over here. It's the S&P risk. And the reason why I say the S&P for me is a risk, because, again, I like to look at charts and data points. And if I look at the S&P chart, the S&P chart's been respecting a channel since about 2017, 2018. That's the channel. That's the bottom of the channel, and that's the top of the channel. Right now, we're at the very top of the channel. Okay, that's where we're at. Same thing, gold is at all-time highs, silver's at all-time highs. Now, we just need one of these markets to sneeze, and the S&P to just have a little bit of a 15% correction, which, would kind of like just do something like that. And then the question is, what would happen to Bitcoin and crypto? Probably Bitcoin would go below $70,000. So I'm super cognizant of the risks here, but I'm also super cognizant of the opportunity. So, if this risk, a 10 to 15% stock market correction doesn't play out, and Bitcoin could continue to rise.
I asked you this because offline, I think you made the quip, or I don't know if it was a Freudian slip, where you said, something along the lines of, we don't want to steer off course in our discussion during a crypto bear market. Use the words bear market. I mean, definitively speaking, Bitcoin is still up a lot in the last 12, 18 months. So it's not like a terrible bear market. I mean, I know all coins are in a bear market. Perhaps meme coins are all flushed out, but did you mean to say all of crypto, or just Bitcoin, or just certain things, like maybe the sentiment that you were tracking? Yeah.
Bitcoin is you could say, probably the best performing asset over, not the best performing asset, but the best performing key asset over a period of time.
Sure.
If you take a time horizon of 18 months, and they'll put us somewhere around there, and you take it where we are today, Bitcoin's up 32% in 18 months. But now I want to talk about what happened in those 18 months, right? So this point over here, this range over here, which is the range of between 50,000 and the range between 75,000, 50 to 75,000, with a majority of the concentration around 60, 65,000. That was Kamala Harris, Joe Biden, Gary Gensler. Okay, so just worst anti-crypto administration that we possibly could have had. SEC regulating by litigation. Just anti-crypto. And we were at 60, 65,000 at this level. Now, we have Trump in power. He is all in on crypto. We have a pro-crypto SEC. We have the Genius Act already passed. We have the Clarity Act in the books. We're starting to get extreme clarity as to where crypto and where the administration lies. At the same time, markets have gone up, and the Dixie, which is a dollar index, and any currency or any asset priced against the Dixie, has repriced by 12%. So what you can say is that just looking at Bitcoin, and we say, okay, 65,000, add in 12%. So you got 65,000, probably got 72, 73,000 just on the dollar devaluation alone, right?
Mm-hmm.
And then what you're saying is that the entire premium that the market is giving for the old administration versus the new administration, plus the increase in liquidity and the move in world markets, is only equal to the gap between 75,000 and 90,000, 20%. It just feels unfair.
If the tide that lifts all boats isn't lifting Bitcoin, do you think that Bitcoin is really the true indicator of where markets are headed? In other words, this theory that Bitcoin is a leading indicator for stocks, especially, and perhaps other markets. Do you agree with that?
If Bitcoin catches up, they'll say that Bitcoin was in a correction. If the market crashes, they'll say Bitcoin was the leading indicator. I mean, that's how markets work. You know that, right? That's what the headlines will say. So, yeah. I think one thing that scares me is a stock market correction. Why does a stock market correction scare me? Because everyone's expecting a good year in the stock market. And when everyone's expecting a good year in the stock market, the market tends to flush out the consensus trade. And the consensus trade is that next year is going to be, Scott Besson said it, he said it's the banquet trade. The 2025 was the setup of the banquet, and 2026 is the banquet. So, if everyone's expecting the banquet, usually the market will go to the point of max pain. So I'm fully cognizant of that. There is a chance, as I say, that the 4-year cyclists are right and that we just preempted a greater market correction, which is about to happen to everyone else. But then there's the flip side, which is the catch-up trade. Now, I've learned not to try and pin my hopes, but rather to look at scenarios and probabilities. And the idea here was just to show the scenario, the backing data, and the probabilities. Whether the market will go up or down, whether stocks will crash, I think a fortune teller, you need to be a fortune teller to say that. The scenarios are that Bitcoin could be up for one of its craziest catch-up trades ever, or that it preempted the stock market and the stock market will correct back to us.
Do you think that over the last year, the reason or the utility for holding Bitcoin has fundamentally shifted? I'll just give you some examples, just based on my personal experience. A couple of years ago, people were talking about Bitcoin as digital gold, perhaps a safe haven asset. Whenever Bitcoin and gold fell together, or rose together rather, when stocks fell, people were calling that out and saying, well, look, Bitcoin's behaving like some sort of safe haven asset, especially after the Ukraine war and broke out. And then there were a few other narratives too, like Bitcoin being digital money with layer 2s being added on. And now what we're seeing is the government's using Bitcoin as a reserve asset. Treasury companies emerging in 2025 is a popular investment vehicle, again, using it basically as a reserve asset. And while gold has gone up, like you talked about in the first 20 minutes of the interview, Bitcoin has not. And so maybe there's a shift in narrative and how people and perception of Bitcoin altogether. Is that true?
So Bitcoin isn't digital cash. It maybe the original white paper said it was digital cash, but cash, it's not digital cash. It hasn't been digital cash for 10 years. We realized 10 years ago that if anything, it's just a long-term digital store of value. It certainly isn't digital cash. Whether or not it's going to be a reserve asset, and you mentioned that in the same sentence. Now, I've got a very controversial view here, which I'll share with your viewers. I haven't really made this view, you haven't pushed this view very hard. If Bitcoin is the digital store of value, in other words, digital gold, and sovereign wealth funds and central banks are going to hold Bitcoin as an alternative or as a complementary asset to gold. One thing in the market which seems to be a good market is actually a Trojan horse. And the Trojan horse, in my opinion, is this. This is Michael Saylor. Michael Saylor raises money every week and buys more and more and more Bitcoin. To the extent that today, Michael Saylor owns 709,000 Bitcoin. Now, 709,000 out of 21 million is, let's just do some quick maths. It's about 3-point-something%. Okay, now he's buying at a rate of 750 million, a billion, 500 million a week. Let's say that on average he's buying at between 500 million and $1 billion a week. And he's picking up more and more and more Bitcoin. Why don't I like this? 2 reasons. Number one, I suspect that right now he's the only buyer in the market. And I have to ask myself a question, what if he stopped buying, right? If there's a buyer in the market that's buying $1 billion a week on average, and he stops buying for whatever reason, inability to raise cash, I don't know, whatever the reason is, then where would this market be without this one single buyer? Now let's extrapolate a bit further. You have one buyer in the market with one board of directors, which can make a decision at any point. They say they won't and they won't, which can make a decision at any point in time to liquidate the Bitcoin. I know they wouldn't because it would ruin the value of their shareholders. What I'm trying to say is when you have a world strategic reserve asset and one company controls one private company with a private, like a public company, but it's not a BlackRock where the ETF is buying on behalf of millions and millions and millions of different shareholders, ETF holders, which if they sell, only sell a little bit because it's one customer selling. Here you're talking about one board of directors which controls 4% of the total supply of the world's strategic asset. And it's in a company. It's not even in a central bank or in a sovereign. Now, I think that this might be one of the reasons why why the market, it's not out there in the market. But I think, the Trojan horse here is that our biggest buyer is starting to concentrate supply of Bitcoin. And you have one company that owns 4% of the Bitcoin supply, or 3%, 3.5% of the Bitcoin supply. And that worries me. I got to be honest. For me, it's not the most ideal distribution.
Yes. Okay, let me end on this note. Because you are a content creator as well as an investor, what are the next stories you're chasing or following for your channel, Crypto Banter, and perhaps other sites that you operate? And I like to ask this to fellow creators because it gives viewers a good sense of what they should be following as well.
So I think one of the biggest things one of the biggest news stories that not many people are paying enough attention to is the ruling around the Trump tariffs. So that ruling has been postponed by the courts twice now. At some point, the ruling has to come out, and if you look at Polymarket gives it about a 30% chance, if I remember correctly, that the vote will go in Trump's favor, which means there's a 70% chance that the court will rule against the tariffs. At the same time, Trump also tweeted, or not tweeted, he Truth Social. I don't know what you call a Truth Social post. He posted on Truth Social, and he said he broke down in a very long tweet the entire what's the word I'm looking for? Like thesis as to why, if this happens, and he ended off the thesis saying we're screwed. We'd have to repay back hundreds of billions of dollars worth of tariffs. We would lose our political weapon. We would have to compensate these people that have moved their production onshore as a result of these tariffs. And he basically says, if the Supreme Court rule against me, we're screwed. Now, Polymarket is telling you there's a 70% chance that the Supreme Court is going to rule against him. If I am the leader of a country and I tell you that if this happens, we're screwed, and then the event that happens, then how do you think the market's going to respond? Right.
This leads me to my final question: is how much of Bitcoin's rally in the beginning of the year was driven by political narratives around what Trump and his administration may do with Bitcoin and the Bitcoin Strategic Reserve and all the pro-Bitcoin and crypto legislations that were being passed or in the process of being passed or planning to get passed. And now the narrative or the interest from the public has shifted from that to annexing Greenland, for example, right? A host of other things that have nothing to do with crypto. And so maybe people, the administration has lost interest in crypto.
They haven't lost interest at all. In fact, if anything, they've delivered on every single one of their promises, literally every single one of their promises. They said that they would get a pro-crypto head of the SEC. They did. They said they'd make United States the crypto capital of the world. They've passed one piece of legislation. They are passing a second piece they're in the process of doing everything that they can to pass a second piece of legislation, which is the Clarity Act, which brings crypto clarity to the markets. They have the Bitcoin Strategic Reserve, and they hold the Bitcoin. They have a lot of Bitcoin. I don't remember the exact amount, but they hold a lot of Bitcoin as part of the Bitcoin Strategic Reserve. So they've literally done everything that they set out to do. And, at the same time, they also guaranteed, they said that they'd make the US a very strong trading company thing, and they'd bring production onshore. And so Trump's basically just ticking the boxes here. And the crypto box is, for all intents and purposes, ticked. And the military capability / owning shipping routes, which is the Greenland, is now the box that Trump is going to tick. You know what I mean? I think he's working to a system, and he's just fulfilling all. I know it sounds hard to believe, but it just feels like Trump is just a politician that is fulfilling every single one of his election promises.
Yeah, certainly some people might agree with that. Okay, thank you very much, Ron. And let's close it off here. Where can we follow you in the meantime?
Okay, so YouTube at Crypto Banter, and on Twitter at CryptoManRan.
Okay, we'll put the links down below. Do make sure to follow Ran and Crypto Banter there. So thanks very much, Ran. Always appreciate your updates. We'll speak again soon. Take care.
Thanks, Dave. Thanks very much.
Thank you for watching. Don't forget to like, subscribe, follow Ran. Links down below.